The Intelligent Investor by Benjamin Graham is a classic book on value investing, first published in 1949. The book provides a comprehensive guide to investing in stocks and bonds and emphasizes the importance of adopting a long-term and disciplined approach to investing. The book is divided into several chapters, each covering different topics related to investing. In the first chapter, Graham discusses the concept of value investing, which involves identifying undervalued stocks and bonds based on their intrinsic value. He also stresses the importance of analyzing a company's financial statements to determine its financial strength and future prospects. In subsequent chapters, Graham discusses various strategies and techniques for investing, including diversification, dollar cost averaging, and a margin of safety. He also covers different types of stocks and bonds, including growth stocks and defensive stocks and convertible bonds. The book also includes a chapter on the psychology of investing, in which Graham highlights the importance of maintaining a disciplined and rational approach to investing and avoiding emotional and impulsive decisions. Throughout the book, Graham provides numerous examples and case studies to illustrate his points and demonstrate the practical application of his principles. He also emphasizes the importance of continuous learning and adaptation, noting that the investment landscape is constantly changing and investors must be able to adapt and adjust their strategies accordingly. Overall, The Intelligent Investor is a comprehensive and timeless guide to investing that continues to be widely read and cited by investors of all levels of experience. Its emphasis on value investing, long-term discipline, and rational decision-making has made it a classic in the field of investing. Chapter 1. Investment versus speculation. This chapter explains the difference between investing and speculation. Graham emphasizes that investing involves analyzing the intrinsic value of a security, while speculation involves trying to predict short-term market movements. He also introduces the concept of value investing, which involves buying undervalued securities with a margin of safety. Chapter 2. The Investor and Inflation. This chapter discusses the impact of inflation on investing. Graham notes that inflation erodes the value of money over time and suggests various strategies for investors to protect themselves against inflation, such as investing in stocks, real estate, and commodities. Chapter 3. A Century of Stock Market History. This chapter provides a historical overview of the stock market from 1900 to 1970. Graham notes that the stock market has experienced significant ups and downs over the years, but that long-term investors have generally achieved positive returns. Chapter 4. General Portfolio Policy. This chapter discusses the importance of diversification in investing. Graham suggests that investors should hold a mix of stocks and bonds and should allocate their assets based on their risk tolerance and investment goals. Chapter 5. The Defensive Investor. This chapter outlines a strategy for conservative investors who are primarily focused on preserving their capital. Graham suggests that a defensive investor should focus on stocks and bonds with a strong financial position and a history of stable earnings. Chapter 6. The Enterprising Investor. This chapter outlines a strategy for more aggressive investors who are willing to take on more risk in pursuit of higher returns. Graham suggests that enterprising investors should focus on undervalued securities and should conduct more thorough analysis of companies' financial statements. Chapter 7. Selecting stocks for the enterprising investor. This chapter provides guidance on how to select stocks for an enterprising investor portfolio. Graham suggests focusing on stocks with a low price-to-earnings ratio and high dividend yield, and avoiding stocks with high levels of debt or a speculative potential. Chapter 8. The analysis of bond values. This chapter discusses the basics of bond investing. Graham notes that bonds provide a lower return than stocks, but are generally less risky. He suggests that investors should focus on bonds with a high credit rating and a favorable yield to maturity. Chapter 9. Convertible issues and warrants. This chapter discusses convertible bonds and warrants, which are securities that allow investors to buy or sell shares of a company's stock at a predetermined price. Graham notes that convertible bonds can be an attractive investment option for investors seeking a balance between income and capital appreciation. Chapter 10. 4 extremely instructive case histories. This chapter provides case studies of 4 companies to illustrate the principles of value investing. Graham notes that successful investing requires a deep understanding of a company's financial position and prospects. Chapter 11. The investor and his advisors. This chapter discusses the role of financial advisors in investing. Graham suggests that investors should be skeptical of advisors who promise high returns and should focus on finding advisors who prioritize their clients' best interests. Chapter 12. Security analysis for the lay investor. This chapter provides guidance on how individual investors can analyze stocks and bonds. Graham suggests that investors should focus on a company's earnings, assets, and liabilities, and should avoid speculative or overvalued securities. Chapter 13. Summary and conclusions. This chapter summarizes the key principles of value investing and emphasizes the importance of long-term discipline and rational decision-making. Graham notes that successful investing requires continuous learning and adaptation to changing market conditions.